Thank you, Kitty. So, hi everybody, welcome. Thanks for joining today. And today we're very happy because we are presenting the output of the 4 Food and Agriculture Working Group in BCI. And today with this we present the result of over 1 year of work, a little bit more. So, yeah, we're very happy that you're joining, and we all hope that we have a very full and exciting 90 minutes ahead, right? So before we go into the details of what are we going to do today and the specifics in the document, I'm just going to give a brief overview of what is BCI because some of you are not members yet. So just to talk a little bit about BCI, the Value Change Initiative is a peer-to-peer learning forum bringing together more than 120 leading organizations across sectors. Our focus is on Scope 3. Of course, our mission is to support our members to reach their targets and with that accelerate decarbonization. We do this all in alignment with, of course, SBTi and Greenhouse Gas Protocol, right? So having said that, also we want to show you some of our membership because we have a very broad membership that goes across the different sectors of food and ag, and apparel, which are the sectors that we work, but also we have NGOs, standards, service providers, etc. Right? So this is a little bit about the BCI. Now, let's see, because we have a very intense 90-minute agenda ahead of us. And before we go into the detail, I also want to mention that this agenda today, it's about this output that we are putting today, we're publishing today, accounting and reporting Scope 3 interventions in the food and ag sector. So the agenda has been designed in a way that you can understand a little bit the context with Greenhouse Gas Protocol, also understand a little bit about the content that is coming in the document, and also hearing some of the experiences from the members and the learnings as well, right? So all this is in the agenda. So point by point, we start with this brief introduction to the BCI and the work of the working group. Then we're going to have a keynote, a 15-minute keynote by Matt Ramlow, who has been leading the LSRG work in WRI. And he's going to talk about building clarity on Scope 3 interventions in the food and ag sector. After that, my colleague Naomi and I were going to give you a bit of an overview of the guidance that we're publishing, but also we're going to go in depth into some of the technical concepts. After that, we're going to have a short Q&A. And then we're going to have a panel discussion with 3 leading organizations, so Unilever, the Meat Institute, and Regro. And after that, of course, we're going to do a very short closing, and that's it for today. So before we start with the content, I also want to introduce the speakers today. So of course, as I mentioned, Matt Ramlow, who is a senior associate at Greenhouse Gas Protocol. So he, as I mentioned, he has been leading the work on the LSRG. And then, of course, my name, Silvana Paniagua, I'm the director of BCI, and my colleague, Naomi Montenegro Navarro, who is the head and heart of the Food and Ag Working Group and all the work that is being done in that area within the BCI. Now, I'm going to give the word to Naomi to tell you a little bit about the process of the working group and some of the members that have been participating in that process. Naomi, the floor is yours.
Yes, thank you very much, Silvana, and pleasure to be here. Oh, this is going too fast. Yes. So thanks all for joining this webinar and listening in today. Indeed, like Silvana said, before we dive into the report itself, we wanted to spend a little time to explain to you where this work is coming from, because this output is the result of a 10-month process of the working group itself, and then another few additional months for working on the report, but a process of in-depth discussions and collaboration between the members of the working group. And these members have jointly defined the set of topics that they wanted to prioritize for the year, and we have been working on those over the course of 5 main sessions, although very often we also organized additional smaller sessions to have enough time to go in depth. But what we did in those sessions is not only to address the challenges, but really also look into the solutions that we can find either existing solutions that can be shaped from the landscape or even develop solutions if they don't exist yet. So companies are enabled to take action. And in addition to the sessions, we've also done a case study on exploring inventory accounting for interventions in complex agricultural systems. So if that sounds interesting to you, stay tuned because we will be publishing this separately over the coming weeks. And I think one more important thing to mention is that, of course, this working group is not the first work stream that the VCI has done, as Silvana also mentioned. So in every new working group, we build on the concepts and the knowledge that have already been developed in the previous working groups. Sometimes that means we can take concepts as they are. Sometimes that means refining and redefining, as for example, changes in the standard landscape, create new knowledge and understanding that allows us to evolve as well. So now I would like you to show the slide that already went on before, because of course we have not done this last year's working group alone, but with a fantastic group of practitioners without whom this report would not have been possible and would not have been there at all. So first of all, a very, very, very big thanks to all of them for all of their efforts and contributions. I expect that probably a few of you are here, so thank you so much for joining us in this journey. So for those of you who have not been part of the working group, we have worked together with 33 implementation partners. So those are all brands implementing interventions in the field or service providers helping brands with the implementation. And many of them have brought on board their consultants or partner NGOs as supporting partners. And we were also very happy to have a very strong representation of the broader Scope 3 ecosystem with several other NGOs and key standards such as Vera, ICU, and EDF as observers. And last but not least, I'd like to acknowledge our technical partners from SBTI and Greenhouse Gas Protocol particularly, who have joined us over many of the sessions, providing updates and clarifications on their ongoing developments, but also helping us to refine and align wherever possible. And I think with that said, it's the perfect time to invite one of our most important technical partners to the virtual stage for the keynote speech. As Silvana said, Matt Ramlow is Research Associate at the Greenhouse Gas Protocol. He leads the development of the land sector removal guidance process, and he has been actively involved in the VCI working group last year as well. So very happy to have you here, Matt. The floor is all yours.
Likewise, and thank you, Naomi, Silvana, and the VCI for inviting me to participate in the call today, and also for all the great work that your team has been doing over the last year. So very excited to see this output coming forward. So if we go to the next slide, I see a number of familiar faces in the audience who might be very familiar with the role of Greenhouse Gas Protocol within the broader ecosystem, but I wanted to take a little bit of time to make sure that everybody is aware of some of the different ways that the Greenhouse Gas Protocol is being used under different voluntary and regulatory initiatives, and how Greenhouse Gas Protocol really provides a foundation for greenhouse gas accounting that can then be adopted within a lot of these broader programs. So if you see in this figure here, we can start with some of the voluntary climate disclosure standards and reporting platforms. Many of you are probably aware of CDP, which is one of the leading platforms that companies disclose their greenhouse gas inventory information. And on CDP, we see a vast majority of the 23,000 companies that report to CDP using Greenhouse Gas Protocol as a basis for their greenhouse gas inventories. In addition, starting back in 2015 with the work of the Task Force on Climate-Related Financial Disclosures, they really highlighted the need for standardization on how companies report on their climate impacts, more importantly, the greenhouse gas emissions within there, and recommended the use of Greenhouse Gas Protocol, which really helped pave the way and help promote adoption more broadly within a lot of other initiatives. So following that, we have seen more recently in the last few years, both the Global Reporting Initiative, GRI, and the International Sustainability Standards Board, ISSB, adapt their climate reporting standard to align with the Greenhouse Gas Protocol framework. And again, these are some of the two leading sustainability standards that are being used by companies currently. In addition to the voluntary programs, we're seeing an increased focus on regulatory disclosures as well. So many of you based in Europe are probably familiar with the European Union and European Sustainability Reporting Standards, ESRS, Corporate Sustainability Reporting Directive, which is mandating reporting following the Greenhouse Gas Protocol. And we've also seen in the US recent federal level regulations from the U.S. Securities and Exchange Commissions in California under the California Air Resources Board. While these developments are currently under judicial review and subject to further development, it still sends a signal that this is the direction that many companies are headed. And then finally, if we look internationally more broadly, I mentioned earlier the ISSB and their alignment with Greenhouse Gas Protocol, but ISSB's climate-related disclosure standard is being mandated increasingly by jurisdiction abroad. So we see examples in Australia, Brazil, Turkey, Nigeria, and even others such as Canada and the UK that are in the process of considering the role of the ISSB standards. So we're seeing increased adoption of Greenhouse Gas Protocol within those frameworks. Another key use case that Greenhouse Gas Protocol is used for is for companies to track progress towards targets. So we'll hear a lot more today about how companies can include interventions within their Scope 3 inventories and use that as a way to track progress towards the targets that they're setting. And Greenhouse Gas Protocol has partnered closely with the Science Based Targets Initiative, and the over 7,000 companies that have set science-based targets are now required to use Greenhouse Gas Protocol to track their progress towards those targets. This shows up both within their broader corporate net zero standard for how companies account for emissions and removals, but then for this working group, we've been working closely with the Science-Based Targets Food, Land, and Ag sector, or FLAG sector, to ensure that the target levels that they set within FLAG are aligned with the accounting guidance and principles that we've developed. And then finally, it can serve as a basis for additional standard setting for sector-specific areas. So Greenhouse Gas Protocol has partnered with other groups, such as the Partnership for Carbon Accounting Financials, to provide financial sector guidance, and the Global Logistics Emissions Council to provide detailed guidance for the logistics sector, and groups like VCI, who are also helping to build on the Greenhouse Gas Protocol framework. So as Greenhouse Gas Protocol evolves, we recognize the need for new guidance. And back in 2020, my team started the development of the land sector and removals guidance to help clarify a lot of the questions that companies had about how do they include removals within their inventory and account for land sector impacts using standardized methods. We also have recently updated our governance and expanded the scope to revisit the corporate standard, the Scope 3 standard, Scope 2 standard, and have launched a number of technical working groups to answer key questions about how companies apply these standards and what updates may be needed to these standards. Within these new work streams, there's also one that's focused on actions and market instruments. This is a key topic that's come up a lot through the VCI discussions as well, about what is the role of market-based instruments, what are the different types of market-based instruments that are being used by companies, and how does that fit into the reporting framework. And while that group is just currently launched, and it may be a little bit of time before we get some final results from them, it's certainly setting us on a good path forward to clarify exactly how these different instruments fit into that framework. But in the face of that, VCI has helped provide clarity along the way to companies of what currently is or isn't aligned with Greenhouse Gas Protocol. So if we move to the next slide, that's kind of the high-level, broader view. But how do we get specific? How can companies actually take this reporting framework and apply it to the specific types of interventions that they might be considering to help mitigate climate change within their own value chain? So we can see from this figure here, if we start on the left and move over to the right, we start from the broader corporate accounting framework set by the corporate standard and Scope 3 standard, which provides high-level framing, but it doesn't answer a lot of these detailed questions about how companies can apply that. even the work that we've been doing within our working groups of the land sector and removal standards and guidance, it's helping to clarify and build increasing clarity on how companies can account for emissions and land sector emissions and removals. But there's still a lot of details that are needed of what are the specific evidence that companies can provide and what is the data and methods that they can use. And that's where we see key partnerships with groups like the Value Change Initiative to help provide increasing clarity to companies and really listen to companies of what are the struggles that they're dealing with right now and provide further clarity. So the Value Change Initiative has been a key partner for Greenhouse Gas Protocol, especially with our land sector removal standard, to help answer some of these questions and provide that clarity to companies and to get to that level of detail that some of our broader standards and guidance are unable to get to. I will say the process that VCI uses of working with member companies and bringing in NGOs, other standard setting organizations and consultants is really key to their success in order to flesh out case studies and real world examples and some of the critical sectors that we see for the food and ag sector. And through this process, it's helped bring forward key questions and concerns that companies are really looking for answers on, and the real challenges that they're facing as they're trying to build out their Scope 3 inventories. So just to kind of wrap this up, I wanted to kind of focus on what are some of those key areas of innovation that we're really seeing the VCI bring to the forefront. And I know Naomi and Silvana will be getting into much more details on the technical aspects, but just to kind of some of my own reflections of how this has really helped our process. I think the first theme would be around really focusing in on how do interventions that are happening within on-farm, how do they get incorporated into Scope 3 accounting? When Greenhouse Gas Protocol is developing our standards and guidance, there's a number of use cases that are being applied. And while interventions are one of those use cases that we're considering to make sure that we provide clear guidance, we're not able to provide that focused lens. And I think a lot of the outputs that are coming from the Food and Ag Working Group are really trying to answer those questions that companies have of how can the actions that I'm trying to do on the ground get integrated into my Scope 3 and count towards my science-based targets or be included in my Scope 3 reporting to demonstrate the progress that I'm seeking. I think the next area that has been a real area of focus, I think you all have had a lot of conversations on this, is traceability. VCI has proven to be critical in fleshing out, well, what is the actual information that we need to build out our traceability systems? And through partnerships with groups like ISEAL and the questions that you have from companies, it's really helped clarify what are the challenges, what that companies are experiencing when they're trying to demonstrate the connection between the products that they source and the farms where they're trying to do interventions. VCI has helped build concepts such as impact traceability versus physical traceability, and what are the different chain of custody models that you can use to demonstrate that. So I know in this report, we're taking that one step further and really trying to provide the specific documentation that companies would need to meet the requirements of the Greenhouse Gas Protocol. And then finally, in that same theme, the third point that I wanted to highlight was around Scope 3 emission factors. The land sector and removals guidance spent a lot of time thinking about the different levels of traceability companies have and the appropriate spatial boundaries that they're considering of how do they think about average practices within a boundary or farm-specific practices. And you'll find in this output that VCI will be launching here today that they really help to clarify what are those different types of emission factors that companies could use and how that can reflect the interventions that are occurring within their value chains. And this is really important because companies need to be able to have a common language of how do we talk about the specific units that we're seeking and what is that information that you're asking of your suppliers. And I really think that VCI has done some great work to further clarify that above and beyond what we were able to get to within the land sector removal standard. So with that, I don't want to steal too much of the thunder on the technical details, but hopefully that provides a little bit more context of kind of the role that VCI has been playing in helping provide the clarity that companies need.
Thanks a lot, Matt. I mean, you can continue. Like, I think that this is great. This is a great overview. Also, you mentioned some of the key topics. And yes, we are super happy to have you and your team also participating with us. And yeah, without you, this has, like this work is impossible. So Thank you. And now let's go to explore a little bit what is actually in the output. So Naomi and I will give you a brief overview. I'm going to talk a little bit about how can you use this output and why we have done it, basically more the high level stuff. And then Naomi will give you a little bit of a sneak preview on some of the specific technical topics that we were developing during the output. So let's start just with the, and a little bit just reflecting on what Matt mentioned on, all this landscape of standards. So everybody that works on Scope 3, we know that it's very complex, very difficult. There's a lot of moving targets. So yeah, there's a lot of uncertainties, etc. Right? So in that environment, it's difficult to actually come with a recipe of what to do, right? So yeah, we're not aiming to do that, but what we do is that we explore different things and we put it on paper, right? So with that, we aim to have in this document a reference for all of you or all the organizations that are either reporting or also developing services for the value chains. So in this document, you can find some of the pathways that can be used for companies to implement, claim, and co-claim these value chain interventions in the food and ag sector, right? So that for us, and from the high level, that means that first of all, you have a good understanding of what is in compliance and what is beyond compliance, right? And in compliance with the current standards, with what we have today in the GHG P, and also what is expected to be in the land sector removal guidance very soon. But also, for example, that you can be prepared for the changes that will be perhaps coming in the next 3-4 years, well, 2 perhaps. So that's also something that we want to put out there, right? The other part that is important from this output is that you have very detailed technical solutions, right? So into the weeds. So sometimes we go very technical, we go very in the methods of things, but in Scope 3, I think that's a must because a lot of the things are intertwined, right? So just to give you also a little bit of a better idea of what is in this document. So we have basically 3 major parts in terms of content. So you will, and each one of these major parts responds to one question, right? So the first content chapter, it responds to the questions, how do I account for the impact of my intervention, right? So in that, we did a little bit of an exploration of, in terms of emission factors and how they are linked to the different boundaries and geographic scopes. Then we also have a little bit of the, in the second chapter, we respond to the question, how can I account and report when I am working with multiple suppliers in a complex value chain? So basically the supply chain, right? So in this chapter, what we have done is that we have explored the value chain as a market-based mechanism, but also in compliance to the sourcing region concept in the land sector removal guidance. So what are the requirements? What does that mean in terms of traceability, et cetera, right? And then in the last chapter, that responds to the question, how can I enable claiming in complex agricultural systems? And by that, we mean, for example, the crop rotation schemes, or even, for example, the co-claiming across different categories on Scope 3, right? So we have explored a little bit, so you know that also this area is very vast and there's always new things. So we have done a little bit of an exploration. We have captured all the practices and the best practices, some of the learnings as much as possible in these chapters. But the idea is that with the content, with these pieces, we can support organizations to plan, execute, and report on Scope 3 interventions with pragmatic solutions, right? So one of the things that we want to also mention very specifically, because we always hear when we present a paper, an output, we always say, well, yeah, well, but we really need to understand what is in compliance and what is not, because there's a lot of things there, right? So we were extra careful in the edition of this guidance to really point out when are we in compliance with greenhouse gas protocol and in consequence with, for example, SBTI, the net zero standard, as right now Matt also explained. So we were very careful, and also at the end of every chapter, you're going to find a table where you have when is it in compliance and what are the requirements, and when it's not in compliance, why not and what's the opportunity there, right? So in terms of market-based mechanisms or the expected evolutions that we will see in the coming months, right? So, well, months of years, right? So why do we do this? Is because, as mentioned, we cannot write a guidance for something that is moving right now. So what we can give you, or the best thing that we can have at this point, is the different options. So every organization can make the choice for the situation that suits best your needs, right? So you choose, you see which is the risk appetite sometimes, or which is opportunity, and then you can act on it, right? So finally, also, what I want to point out is that, and I personally think this is one of the best or the most insightful things from this process, is that we capture the accounting journey, right? So this accounting journey is, at the end of the day, just to illustrate all the decisions, all the different requirements that you need to comply, the different limitations, the implications that every person that is doing Scope 3 accounting will find, especially for the interventions, right? So with that, we have tried to put it as clear as possible, and that will come across all the different chapters in the guidance. But the thing is that we also try to use this type of tools like checklists or, decision trees, et cetera, in order to make this a more operational document, right? Because the idea is not to say, well, these are the principles, yeah, let's go for these high-level principles, these ideas, etc. No, the idea is to have something that every company can use and can understand, as well with the different teams across sourcing, across strategy, across sustainability, etc. Now, this is a little bit of an overview of what you will find and how can you leverage it. But now Naomi is going to tell you a little bit about the concepts that are really developed in the guidance.
Yes, thank you. Let me click one slide forwards. And as Silvana said, the idea for the coming 10-15 minutes is to give you an overview of some of the key concepts and outcomes discussed in the output. And I will do that per main section, as Silvana just explained. But we will not go fully into depth in all the nitty-gritty details because we don't have time for that. So we really invite you to read the output, of course, if you want to have more details and a more thorough understanding. But this overview will at least give you an idea of some of the main topics addressed. So let's start with the first part on greenhouse gas accounting, where we have looked into the different types of emission factors that companies can use when reporting in their Scope 3 inventory. And here it's also important to flag that we have been looking into emissions only. So the discussions on removals are still to be had. We'll be developing this in the upcoming working group that we're running now. But in a nutshell, what type of emission factor you can use, that depends on the spatial boundary at which you account and report. And that can range from a specific harvested area, which would be the most granular level, to larger scales such as country level. And what is interesting is that organizations that are reporting at the sourcing region level and that are interested in separately showing the impacts of interventions that they have been doing on a set of farms within that sourcing region, but they still want to use inventory accounting, they could leverage a so-called stratified emission factor concept that we have developed in a previous working group to show those outcomes aggregated for the intervention farm emissions, and then use a residual emission factor to show the emissions from the non-intervention farms separately. I will be explaining a little bit more about this in one of the later slides. So in the second part of the report, we dove into the topic of supply sheds. And we redefined the definition a little bit. So it's now a supply shed is a group of suppliers providing functionally equivalent goods or services within a fixed and spatially defined area that is demonstrably part of a company's supply chain. And it includes all the suppliers within the designated boundaries, regardless of their practices or segmentation. And those of you that have been following the work of the VCI for a longer time know that the concept was originally developed to address situations where a reporting company was not able to fully and directly trace sourcing to that one specific supplier where the intervention had been taken place, but they did know that sourcing came from a group of suppliers, and those then were clustered in the supply shed. However, conversations in the working group showed that other interpretations of the supply shed were also used. And as this concept was developed in 2021, this was also before the development of the land sector and removal guidance. And as this whole process is now close to finalization, and due to all the collaboration and discussions that we had in the working group and also with Matt, as he just explained, it's possible to now specify that there are actually two interpretations of the supply shed that can work, but that are inherently different and that each have their own purpose and thus also restrictions. And the original concept of the supply shed as a market-based mechanism creates an association between the intervention and the value chain using that principle of equivalent goods and services. And this really works in situations of limited traceability because it's not necessary to establish a full chain of custody system, but only to prove that association to the value chain. So as such, it reflects the performance of the interventions using a market-based mechanism because it doesn't use full physical traceability. But because it is a market-based mechanism currently, it is not allowed for integration into the Scope 3 inventory yet, but it should be reported separately. Now, companies that aim to fully comply with the upcoming LSRG can ensure to design their supply shed in such a way that they are equal to the land sector removal guidance sourcing region concept, which is different. And this, among others, includes and means that all attributable productive lands are to be included. Reporting emissions and removals are bound to the volumes that are sourced. Physical traceability is obviously required. And this is different than the supply shed as an MBM. What is accounted for is the overall performance of the entire region, not just the intervention. And this is still to be published, but good to flag and be aware of. To comply to the sourcing region concept, there are further requirements that you have to adhere to. These will be published in the LSRG, so we will not be going into this. But in relation to this last interpretation of the supply shed sourcing region level in line with the land sector removal guidance, how can companies go about accounting for interventions using inventory accounting, using that supply shed sourcing region level? First of all, as stated in a previous slide as well, companies can account for the volumes they source from a sourcing region if physical traceability can be established. And if that's the case, so for the volumes of goods sourced, they can determine the corresponding emission factor. And here there are basically two options. Either the company reports the emissions for the entire shed using the supply shed or sourcing region emission factor, and that basically means that your intervention outcomes are absorbed into this emission factor. So if you have a relatively big program in comparison to the total size of your sourcing region, it might actually substantially influence your emission factor and it still shows, but it could also be diluted a bit. So if the company wants to separately show the outcomes of their interventions, then they can separate those farms and aggregate the intervention farms into a stratified emission factor for the impacted volumes. And this implies that a residual emission factor is needed to account for the remaining volumes. So for those farms within the supply shed that have not been impacted by interventions. But for this concept, it is important to be aware that there's still ongoing discussion on whether this residual emission factor has to be fully based on measured data, or whether it could also be covered by an industry average, and if yes, so always or under what conditions. So debate on this is still ongoing, and this is on the agenda for future work streams of the VCI that we're going to look into this year. So stay tuned for that. But overall, it's important to realize that this kind of equation is not too hard. I mean, getting your data might be hard, but these two factors combined of the volume sourced and the emission factor give the company the emissions in a given year for the product of interest, either absorbing the intervention outcomes through a single emission factor or separately showing the outcomes using the stratified and a residual emission factor. And one more thing that's important to note here is, of course, that for not for all companies, it's going to be able to have that traceability to the sourcing region or even to the set of farms if you're using a stratified emission factor, but it's also not mandated. You can also report at less granular levels, for example, country level, and then use a default emission factor from a database to report for your volumes from the sourcing region in your inventory. But then if you're doing interventions, these are to be reported outside of the inventory using, for example, the impact traceability concept that Matt referred to earlier on as well. More on that in the report too. In the third part of the output on enabling claims, we discussed situations where companies find themselves in interventions using crop rotations, in interventions in which byproducts are created, or any other context that asks for allocation of impact across total parts, or across the different parts of a total system. And the guidance of the Greenhouse Gas Protocol is relatively clear in its demands on allocation keys. They have this hierarchy also mentioned in a report. Not to go into now, but what is important to note is that those requirements also mean that sometimes following the Greenhouse Gas Protocol means that companies will experience stranded assets, as they are not able to claim all the outcomes themselves, and they're also not able to find other co-claimants to share the investments with, for example, for the other crops in a rotation, because that would be the most logical solution to avoid allocation. But sometimes that's not always possible because markets are still immature, for example. And because this was quite a pressing issue for many of our members, we have explored potential solutions to deal with this situation. And a first solution, which is actually not an allocation solution, and which can be used in a situation of crop rotations, would be to combine the voluntary carbon market and Scope 3, and to pivot between Scope 3 inventory claims and offset credits, depending on which crop is grown when in relation to what you report. And where this pivoting is not possible or not desirable, then allocation approaches using market-based mechanisms could play a relevant role in creating a little bit more space to make claims, providing companies with increased incentives to invest. So because of this, we looked into two market-based approaches in the working group. One was free allocation, which kind of enables transfer of all mitigation outcomes to the target products. And secondly, reallocation, which enables transfer of mitigation outcomes as well, but leverages the available volumes in the supply shed, meaning it has a little bit more built-in limitations. Now, we also won't be going into depth here, but it is important to flag that for the market-based approaches, they would really require strict safeguards to avoid inflation of mitigation outcomes, which are already partially defined for reallocation, but not so much for free allocation. So it will require more research and work. And currently, they can only be reported outside of the inventory, as they are market-based mechanisms and cannot be integrated. But these boundaries aside, if companies would like to make narrative claims, for example, they do allow for easier claims and can therefore also potentially help to unlock return on investments. So let's move back to the helicopter view a little bit. It has probably become clear that there are two pathways to account for value chain decarbonization. So the first one leverages inventory accounting, adhering to the guidelines set by the Greenhouse Gas Protocol as they currently exist, while the second pathway leverages market-based mechanisms and could be based on project-based accounting as well. And in the report, both directions are addressed, as both are rooted in different underlying principles. They have their distinct goals, and they have their own merits and limitations. So it's important to be aware of the trade-offs so you can make your own decisions on which portfolio of solutions and accounting pathways you want to use and why. And the fact that these pathways can currently not be integrated does not mean that they are mutually exclusive. So companies can engage in developing their inventories and use project accounting or market-based mechanisms outside of the inventory, for example, to account for their interventions that they have been doing, regardless of the fact that physical traceability wasn't fully possible yet. But whatever you do, engaging in value chain interventions requires conscious decision-making by you as a company, and always keeping in mind the goal of achieving rapid decarbonization, but also regeneration and systemic change at the landscape level. So that's why we have this menu of options for companies to take a look at. And all in all, that's also really what we aim to help organizations with, to make those conscious decisions, to be better prepared for the future, by looking into both operationalizing the LSRG and exploring MBMs. We aim to help create harmonization wherever possible, provide clarity where existing guidance is limited, particularly in this moving landscape, as Silvana said, and support companies in having a better understanding of the Scope 3 landscape and a better ability to make decisions on what they want to do and why. And the document is available for download since today, so make sure to take a look at our website and scroll through all the different parts that are relevant to you. And then lastly, what is next? Because obviously this work is not done. There are several major developments coming up this year that will greatly influence accounting and reporting in Scope 3. So, of course, we have the publication of the land sector and removal guidance coming up. We have the update of the corporate net zero standard by SBTi. And there is a revised guidance on chain of custody models and traceability by ICO, which is also still an ongoing discussion, which is very important to further operationalize, as Matt also referred to in his talk. So, of course, we will be following and contributing to all these developments very closely in the VCI, and especially in the current Food and Agriculture Working Group 5. We have started that last November. So we will be diving further into the nitty-gritty details. For example, okay, we're going to use inventory accounting to account for our interventions, but then how do you deal with your base years and how do they relate to your target years? How can we operationalize traceability if we're not talking about certificates, but we're talking about greenhouse gas attributes? How do we account for removals, among others? So if you feel like this is a conversation in which you need to be involved, please reach out and join us. So yeah, that was what I wanted to share about the output. So indeed, this is a high-level, super fast overview. There's much more detail and nuance in the report, but we just wanted to give you an idea of what we have been working on and what you can find. Silvana, back to you.
Yes. No, thank you, Naomi. So thanks for submitting the questions. So we are answering some of the questions one by one, typing, but also we are waiting because perhaps we have a brief moment to answer some of the key questions. So perhaps let's start with the first one. So can you clarify the meaning of beyond greenhouse gas protocol compliance? I think this is a very good one. And I think, Naomi, you can take this one.
Yes, and it's a very good question because we have kept it a little bit cryptic as beyond greenhouse gas protocol because there is no current standard or guidance that provides clear boundaries as to what we are talking about. But current greenhouse gas protocol guidance is everything that relates to inventory accounting, that relates to physical traceability, absolute emissions, the inventory that you create. The other domain is the whole realm of market-based mechanisms in relation to accounting for interventions, because that's what we're focusing on. And there are, like Matt said, discussions being held currently within the new working group of the Greenhouse Gas Protocol, so the actions and market instruments. There is discussion ongoing within SBTi on the EACs, so the environmental attribute certificates. So that could change how they are, how they could be useful in relation to targets. But because all of this has not been completely or not even limitedly defined, this is the realm of beyond greenhouse gas protocol compliance currently. But this is something that asks for a lot more work and clarification in the upcoming years, I think.
Perfect. Thank you very much. And there is a second one that it's also interesting because it says about if companies can use BCM standards like BERRA in their Scope 3 inventory. So in a nutshell, that's the question. And I can give a little bit of an overview there because normally we're talking about different types of accounting. So the short question is, no, you can't. However, one of the things that we are exploring, and I say exploring because it's still, there is a long way, there are a lot of things still there are still a lot of questions there, is also that if you can leverage certain aspects from that project accounting to account into the inventory. So perhaps, Naomi, do you want to give also a little bit on that, on the project accounting and inventory?
Yeah, not sure if I fully grasped the question, but like currently project accounting cannot be integrated into the inventory under greenhouse gas protocol standards. What is explored is the relevance of potentially using market-based mechanisms, and particularly in relation to targets. But an interfacing of the two different accounting approaches, that is not something that is coming up, I think.
Yeah. So, so just to answer the second question on using instruments from the current voluntary carbon markets right now might not be possible as it is, right? So just for clarification.
Exactly.
Then there is another question, which also is that one I want to take it because it's about who defines the spatial boundaries for the supply chains, and is there consensus about that those boundaries? Well, no. So there is no consensus, and also that's also why it makes it so difficult, right? So what we also found in this exploration, and that's also since the previous working group, is that this supply chain will depend very much on many aspects, such as the data availability, the sector, the commodity, for example, the characteristics of the commodity that you are working with, etc. Right? So, for instance, in the case that, for example, in Canada, we had examples where in Canada we have a very high level resolution of data because the databases already exist, right? So that's also something. Naomi, do you want to add? Sorry, is it like if you wanted to add something, but it was just basically to say that that depends very much on the markets and also on the specific data availability of the supply chain, for example. Also, just to add that in the output you will find we have.
You have muted yourself, Silvana.
Sorry, we in the output we have 3 archetypes or 3 different types of supply chains, where we already mentioned some of the things that drive this type of definition of the supply chain as well.
Yeah, maybe one thing in addition to that. So we have made a first sort of attempt to characterize archetypes per commodity type, because there must be characteristics that are repetitive within the different subsectors of food and ag. But this limited exploration that we have been able to do in the Food and Ag Working Group now also showed that this needs more work and hopefully also case studies that I would like to do to be able to concretize this further. But I think there is also a part that will never be, there is not going to be off the shelf, this is what your supply chain boundary has to look like, because it depends on so many different factors. Depends on the geography that you operate in, depends on logistical availabilities, depends on the commodity and how long it stays fresh. So there are too many parameters that might change depending on where your market is for a sort of silver bullet supply chain to exist.
Yeah. So Naomi, I just want to check in terms of time. Can we move on to the?
I think we can do one more question and then we move on to the panel discussion.
Okay. So there have been some questions also about removals, but that's also something that we will be exploring in the context.
Then we invite you to the output launch of 2026 Group 5.
Yeah, there was another, for example, I think that it's on the emission factors. This one is interesting. How can we calculate the residual emission factor? So that's a great question, and that's also we can invite you to participate. And in BCI, we're going to have an emission factor lab, because also as Naomi also showed, and also a little bit the reflection that Matt shared, is that a lot of the attention and a lot of the work right now is on traceability, right? And the emission factor also is something that still we need to refine. And during the work stream, during the working group, we identified some of these questions. We already addressed some of these questions, on a high level because the time was constrained, let's say, but we are going to launch an emission factor lab so we can have a bit of an in-depth exploration of these methodologies. Now, this residual emission factor, it comes very much from type of scope 2 thinking, but we know that also in scope 2, this residual emission factor is calculated by a centralized provider or somebody that controls a little bit the whole system on a high level, which in a commodity market, in a food and a commodity market is complicated that happens like that, right? So we understand that might not be fully replicable what you have, for example, this notion and these different concepts that one could find in scope 2. Again, this is yet the things that we want to explore in the output. What you will find is some of the reflections and some of the alternatives that also different members propose, right? Because then we could, we even did a little bit of exploration on what would mean to have, for example, a baseline emission factor, or what would it be to have a common practice, etc. So there are options right now that's not fully defined because this is something that we just started unpacking, but we expect to have a bit an in-depth exploration later on. Yeah. So I think, Naomi, I can pass it on to you right now.
Yes.
So
Yes.
we can start, and we will try to answer all the rest of the questions in writing. So thank you very much.
Yes, thank you very much for all the questions. And indeed, if we are able to answer some of those on the chat, we will do so. And if you have remaining questions that you'd like to ask, please reach out to us via email. We can always get in touch. But for now, I would like to start the next part of the session. This is the last main part of our webinar. So I'm very excited to kick off our panel discussion, Driving Value Chain Decarbonization in the Food and Agri Sector. And for this, I am very excited and grateful to welcome to the stage our panelists, Molly Liesner from Unilever, Sam Waldman from the Meat Institute, and Lucia van Roysner from RegrowAg. And they have all been part of the working group. So they have all been my esteemed members over the past year, actually still are. And it's good for you to know that they all play a very different role in the landscape, one being a brand, one a sector organization, and one a service provider. And in the coming half hour, they will share with you their experiences as practitioners within the Scope 3 field and share on how they have been leveraging the working group in their work as well, each coming from their different perspectives. So very, very big welcome to all of you. Great to have you here on screen with us. Mariana, if you can take off the slides, then we can just spotlight the speakers. And yeah, let's start right away. So Molly, let us kick it off with you. Good to see you. So you are Senior Manager, Impact and Assurance at Unilever. It's one of the largest manufacturers and brands in the food and ag space in the world. I'm sure everybody on the call knows you. And Unilever has set 2 near-term science-based targets for Scope 3, one specifically for forest, land, and agriculture. So could you explain what this target is and why it is so important for you to increase understanding of Scope 3 accounting and reporting to achieve this?
Thank you, Naomi. So Unilever's Scope 3 goal on FLAG is to reduce its emissions by 30% by 2030. It's really important for us because actually the Scope 3 FLAG emissions are almost a quarter of our total corporate footprint. It's 23%. So it's a really big part of our corporate footprint, even though it's in Scope 3 rather than Scope 1 and 2. For example, every time you eat a Magnum, any cocoa or vanilla or dairy that goes into that Magnum will have been grown on a farm that will have emitted greenhouse gas emissions. There are quite a few different ways in which we want to decrease our FLAG emissions. For example, we're reformulating some of our ingredients and our products. We're also trying to buy less of commodities where there's a really high risk of deforestation. But there's also a great initiative we're doing around transferring a lot of the agricultural products we buy to regenerative agriculture, which is very exciting. The problem is that to get any of those initiatives going, staff at Unilever have to be able to get buy-in from management. And the first thing people ask is, okay, well, how many reductions or like what kind of impact will this project get me? You know, Molly, you're asking for £10 for your project. You know, how is that going to change our scope 3 inventory? And without a standardized accounting framework that I can use, I can't give a credible answer to that question, which means that we struggle right from the beginning before projects and initiatives even start. So for that reason, the clarity that we can get through working groups like the VCI, Food and Agri Working Group is really valuable, because it doesn't just help us actually account for the emissions, but it helps us to get these things funded and invested in the first place.
Thanks, Molly. That's a super clear answer, and great to hear that the VCI also helps with getting the internal buy-in. Sam, I would like to move to you. You are a strategic project director at the Mead Institute, which is a sector organization, so you don't have science-based targets yourselves. So could you first explain what role you play in the Scope 3 landscape and what your most important goals are? And also share whether you recognize the challenges of understanding for how to account for Scope 3 and getting that internal buy-in from the MTs of your members that was shared by Molly as well.
Yeah, happy to, and thank you for having me on the panel today. So as you said, Strategic Projects Director at the Mead Institute, we are a trade association representing packers and processors of animal proteins, red meat and poultry in North America. And as a member organization, you know, our goal is to enable sector level change in a way that supports business objectives. And Scope 3 accounting is one large, complex part of that from a sustainability perspective. So my job really is to convene supply chain actors, our members, upstream to the farm where animal agriculture is produced, and also downstream to the customer base, the Unilevers of the world as well. And by convening those stakeholders, what we're trying to do is ensure that the tools and resources that are developed and deployed are aligned with the market needs, and backed by strong science. So in my world, really climate action, climate change, and ultimately corporate accounting is best interpreted, I think, kind of as the role of supply chain resiliency and adaptation. For us, you know, we want to ensure that animal agriculture is a solution and that we're working together to bring that to bear for the market. So, you know, Molly, I love the example that you pointed to on some of the internal complexities of getting to a decision and putting investment and support behind an initiative. To me, that is one of the big challenges that we all face in our complex supply chains that really limit our opportunity here. I've been really enjoyed and been really fortunate to be part of the Food and Ag Work Group this year. I think this output, the supply shed accounting, really helps to bring some of the complexity to light in a way that is relatively straightforward. My favorite piece is, those that know me know I'm a sucker for a good visual, and I really like the flow charts and some of the visuals in the output that really kind of cut through the noise for some of this.
Thanks, Sam. You can thank Silvana for that, because she also loves visuals and is very good at creating those. Lucia, let's move to you. You are Director Carbon Protocols and Policy at RegrowAg. So you know very well how dynamic the Scope 3 landscape is. Can you explain what your role as a service provider is in the Scope 3 ecosystem and how the accounting challenges that you're dealing with have evolved over the past years?
Yeah, so Regrow plays a lot of roles in helping companies on their regen ag journey. But as a service provider in the Scope 3 ecosystem, we serve most directly as a digital MRV provider. So that means we enable companies to plan, measure, and verify the climate impacts of agricultural practices in their supply chain. And we do that using a combination of remote sensing, biogeochemical modeling, and in-house protocol expertise. So as director of protocols, my job is to ensure that our products, science, and client projects align with the various leading global climate standards and can pass rigorous audits for both Scope 3 and Scope 1, which we have done for a wide variety of projects. So that means it's also my job to read the greenhouse gas protocol hundreds of times and interpret how it can be applied across the wide range of projects we work on. So given that we do quantification, all the accounting challenges come directly across my desk. A key challenge we are facing now is how or even, whether inventory accounting can be used to finance programs. When we started out, the leading view, is that we could use the template of Scope 1 offsets. It's been a tried and true mechanism in the marketplace as a template for Scope 3 programs. And so many of the programs that came across our desk were set up using intervention accounting to generate inset credits that could be used to finance projects similarly to how offset projects are financed. However, Scope 1 programs are intended to generate pure carbon assets from a project area, whereas Scope 3 is intended to decarbonize a value chain with multiple byproducts, co-claimers, and various levels of traceability. So it's a lot more complexity there with the accounting. And also Scope 3 is concerned with impacting, the corporate inventory, whereas Scope 1 offsets have always been reported outside of the corporate inventory. Finally, I think we are really struggling with the lack of clear vision in the industry. Are projects intended to decarbonize an individual value chain or regenerate a landscape in which those value chains operate? And inventory accounting currently only allows for claiming and financing activities within the corporate value chain. But obviously, we need to regenerate the landscape if we're going to tackle all these environmental issues that are threatening individual value chains. So programs that myopically focus on just their corn rotations that are in their inventory and ignore the broader landscape are most likely going to fail to achieve much, given that the grown obviously is grown on a field that is part of this landscape. And I also love all the visuals. It is very helpful to organize the 800 pages of text in the greenhouse gas protocol into something I can show my team and explain to.
Thanks. And yeah, the point that you make before that is also a critical one, and one that we want to have front and center in the VCI as well, because that's also some of the outcomes of the previous exercises in the case study, for example, that you were involved in actually, and the discussions that we had last year, like how to reconcile and can we reconcile inventory accounting with the systemic and diversity focused landscape change that we need to achieve, because sometimes that makes it hard, which is also why it is interesting to explore the potential for market-based mechanisms, because we might need both tracking what our emissions are doing over time and being able to rapidly ensure systemic change. So I think you make a super important point there. A follow-up question I wanted to ask you, because as Regrow, you have been member of the VCI and part of the working group for multiple years. So can you share, and you are the one that reads the 800 pages of the protocols as well. So can you share which of the topics have been most relevant to you as a service provider for the role that you play in the landscape, and what are the most important insights that have informed your work internally?
So as an MRV provider, Regrow sits in a unique position at the nexus of many companies, value chains, and geographies across the industry. So given, my role is to interpret greenhouse gas protocol, SBTI, VCM, other standards for all these projects, my lame answer is that every topic that the VCI has worked on is directly relevant to our work. Some of note include, how to account for and claim investments in a supply shed. What is a supply shed, and what are the roles of the various actors in that supply shed in verifying that impacts have actually occurred? And what level of traceability is required for reporting impacts? And then just discussing the real world case scenario studies to understand how and why rules apply in different scenarios. It's really helpful to take this both extremely detailed, but also very vague guidance and make it very concrete in a specific case study with great visuals. And we keep coming back to that. So I think most useful is the ability to sit down with other experts in the space and really just share learnings about what's working, what's not working, what feels difficult, and have an organization that's kind of gathering house project manager for that process.
Yeah, thanks. I think indeed, probably one of the main powers of the VCI is actually the community that builds the VCI. So the practitioners that all come together and the space that we have created to the safe space sort of to jointly work on all these questions that are hard for everyone, because we have all these front runners in the working groups and they still have question marks in their eyes. So that shows just how complex this is. So Molly, I would like to turn back to you because you just shared why it's so important to increase that understanding of Scope 3 to also get the internal buy-in, not to only get sort of the external results. Can you elaborate on what the most important knowledge developments have been from Unilever and how you intend to use these in your value chain to achieve your Scope 3 targets that you just referred to?
So there's so much actually that we learned from the working group, and there's also so much that we found out that we didn't know the answer to, sort of known unknowns. And so what I've taken back to my colleagues at Unilever is I've really tried to simplify it down to 3 things that I felt that the working group could be quite clear and definitive about. So those 3 rules were that we have to meet enhanced mass balance traceability requirements if we're going to have initiatives that we include in our Scope 3 inventory. Second, we have to be using inventory accounting if we want to stay compliant with the greenhouse gas protocol as it currently sits. And then also there are rules about how we adjust and update the emission factors in our Scope 3 inventory. We can't just use any method. There are specific methods that we have to use. And those 3 things are not necessarily the opposite of what Unilever was doing before, but it just helped my team get clarity and say, okay, we know we're doing this, tick, move on, and then address the areas where we know we need to change or develop, like with the traceability. There are still lots of things that we don't know, but at least now we have a few things, concrete things to work on to make sure we're progressing.
Thanks, Molly. Very clear and also understandable that there are still question marks in the operationalization of some of these topics. And like you mentioned, the traceability one is a question that we have been able to open up, as Matt was also referring to in his keynote during this working group, but we'll definitely be diving into this in more detail because there are much more clarifications to be brought to the fore, particularly with the upcoming revision of the chain of custody standards or guidelines from ICIL. So I would like to go back to you, Sam. As a platform, you have a bit of a different role than Lucia and Molly, and you hear the experiences and challenges of a wide range of companies, all having different parts in the value chain, taking up a different position. So what have been the pivotal insights for you that you will take back to your sector for consideration and implementation, maybe to these different parties with these different roles?
Yeah, to me, it's about clarity through complexity and looking at, I'm going to say it again, the visuals. There's a great one, figure 1, I think it is, with the chain of custody kind of decision tree chart. We use that a lot internally to inform conversations with a variety of members, not just those in the project space or in the aggregation space, but across the supply chain to kind of get to the root cause and the real challenges behind both the chain of custody and the traceability of both the products and the environmental attributes that go along with them. So I'm not saying anything that most folks listening don't already feel and know probably, but the more that we can use those things to have grounded conversations on real scenarios, the better off we'll be. And so those kind of resources in the output have been really, really helpful to informing our conversations broadly. I also think, big picture, the supply shed concept is, I think, a great one. And I think the challenge is in kind of striking this balance between what is the right and the right type and right use of primary data in order to demonstrate reductions, while also ensuring we don't pass off inaccuracies across the value chain. So it's a fine line and it's kind of a dance, but really looking to strike that balance is something that I think we're all trying to achieve together.
Could not agree more. All right. Thanks so much for sharing your contributions. As a final question, I would like to ask each of you to share your sort of 2 cents of advice to other platforms or service providers or brands that are listening today or might be watching the recording on what they can do to accelerate action in Scope 3. And of course, briefly also share how you think the VCI can contribute and what role we can play, so we can learn from that as well. Sam, you were already giving a good introduction on striking that balance. Maybe
Sure.
you can take it forward from there.
Yeah, cut through those unknowns. How do we cut through those unknowns? Remain credible, be action oriented. My suggestion is that anyone wading into this space or swimming through it, trying to find their way out, just focus on ways to avoid perfection. This is not a perfect tool right now. GHG accounting is not a perfect tool. It's evolving as a discipline, I think, and we see that in the standards and the application. So to me, the benefit here is being candid with each other and highlighting imperfections along the way so that we can work through it as we make progress.
Thanks. I think that relates also to the point that Silvana made earlier in her talk in the introduction. Like we are developing guidance in a dynamic and moving landscape. So sometimes you just have to go and then at some point adapt because things have been changing, but at least go. Very good point, Sam. Thank you so much. Lucia, what would you say as a service provider?
I think it's really important to keep the end in mind. And by that, I mean, companies and organizations need to have a clear vision for the impact that they are trying to create in the regions in which they operate. I see a lot of companies jump straight into process and frameworks and accounting, but then don't actually know where the end state is. And obviously, if you're accounting for something without knowing where you're going, it's not, you're going to end up somewhere, but maybe not where you intended. So really think about, what will the landscape and region look like as a result of this program that you want it to look like? If you're going to spend millions of dollars, what is that, ambitious visionary change? And then start the frameworks and accounting towards that. Individual action is meaningless if the landscape is ignored. And so we need to evolve all of our plans and investments and accounting systems to enable regeneration of the landscapes, not just individual corn rotations. And I think the VCI can really contribute by aligning the industry around some ambitious visions in key landscapes, and building the accounting frameworks that enable investment and claiming in that vision and establishing the partnerships to feed into that. I know every company is usually focused in their silo and wants to do the landscape, but maybe doesn't have the bandwidth or resources to pick up and look at that landscape. So it'd be really helpful to find ways to enable that.
Thanks. Super good point. Molly, lastly, what piece of advice would you like to give your peers from the manufacturing and brand space that are 100% sure also on the call?
I think there's a bit of a theme based on what Lucia and Sam have said, but it is genuinely the advice I'd have, so I'll give it, which is not to let the lack of clarity in accounting get in your way. The worst situation you could be in is one where you finally completely understand the accounting frameworks, you know exactly what to do, but you don't have any work or impact to account for. So make sure that you keep doing the good work, try as hard as you can to not let this, the lack of clarity here get in the way. Don't be paralyzed by that lack of clarity.
Yeah, that's a super good point. Thanks, all three. I think if I can summarize sort of everything that you have said in this last few minutes, it's about having the goal in mind, knowing what it is that we want to achieve instead of only looking at what is the maximum carbon reduction that I can achieve on this single crop, but what does the landscape need to look like? And then just go and be okay with the fact that this is still changing. It's still a dynamic landscape. Look at the report, it will give you some guidance, but also be okay with having to adapt over the course of time, because we are still co-shaping this world. Fantastic. Molly, Sam, Lucia, thank you so much for joining and your willingness to share your reflections with us. And yeah, happy to see you next week in the next working group sessions. With that, I think we can move to the closing of the webinar. Silvana, back to you.
Yeah, fantastic. Thank you. And thank you, and thanks to all the panelists. Really great discussions, and and we hear you on the visuals, so we will keep using more and more visuals. So thanks a lot. So now let's close, and thanks a lot for staying with us until now. We know that it's always difficult after 1 hour because this there are very busy agendas. So just for the closing, we want to mention a couple of things. The first one is that, of course, the output is there. Like, please go to the link, download, read it, send us feedback, send us questions. For us this is really good because basically there's a lot of work to do, and we want to see who's interested, what are the questions, what is valid, etc. Because we are building the plane as we're flying, right? So as Pankaj already said in September. So yes. The more idea of what are the questions out there, what are the different perspectives, the better, right? So please, also, you can always reach out to us in this regard. Then the other thing that we want to share is that, especially if you're not a VCI member and if you like what you see, so please reach out to us, because we can also tell you a little bit about the other work that we're doing. And as I already mentioned, we have planned to do some work on the emission factors in the emission factor lab. Also, we have a finance lab also in the pipeline as well, etc. Right? So please reach out to us. And then finally, part of the success of these documents, of this guidance, is that we have a very robust process, and part of that process are always consultations, right? So right now we have an open consultation on the apparel and footwear output. So this is, you can go to the website there. And I know that here I don't think anybody is in the food and ag or in the apparel sector. Perhaps I saw a few names. But this is very interesting because the explorations that we have done there actually help us to understand how do you go from, in a value chain, from a very commodity focused perspective and commodity interventions to product level interventions, right? So we have completely different types of traceability, different types of challenges, different problems with allocation, etc. So this output is very interesting because that reflects this type of thinking already. So regardless if you are in the apparel and footwear or not, you can really understand this type of struggles. Plus, also we start exploring something that in BCI we haven't explored before, which are the landscape level interventions as well, especially in energy. So this is very forward thinking, right? So please go to it, browse to it, give us some feedback, let us hear from you. And yeah, because actually this is the only way that we can make this type of documents as well robust and get more perspectives, more input, and we can actually make it future-proof. Now, we expect to launch this output as well in April, so stay tuned. And again, you don't have to be an apparel company to find this interesting, because really it is interesting. So thanks a lot. And well, finally, just a big thank you from all of us, because this has been a great launch. We expect that you download the guidance, you send us comments, you send us questions, you join the VCI, and yeah, we meet each other soon. Thank you.